Hello, investors and traders. This video will explain a winning strategy using Relative Strength Index, RSI. The strategy combines other indicators with the RSI to give you a rule-based strategy. This video will not go over the basics or definitions, but build a strategy that will take away the uncertainty of investing or trading. In my personal hedge fund, I built over 50 indicators to build a weight of evidence. These are some of the indicators. So for this RSI strategy, please study it, analyze it, adapt it. The overall strategy is taking three different relative strength indicators, which are RSI time period 5, stochastic RSI time period 14, and PS stochastic RSI time period 5 with a MACD buy signal, disregarding all signals against the overall trend of the market.
Rule 1, follow the top-down approach. The top-down approach to investing focuses on the big picture, or how the overall market is trending. If the overall market is doing well, chances are the RSI combined with MACD will also do well. What's the trend of the market? If it's negative, you'll want to do very little, if any, buying. Even if you see some stocks breaking out, your probabilities of success are quite low when the market trend is going against you. On the other hand, if the market is doing well, this combination of indicators, back-tested, has amazing results. Of course, if the overall market is uptrending and we are in a bull market, a lot of indicators will work better. A lot of strategies will work better. So that's why it is so important to understand the macro picture. For this case study, we will assume the overall market is bullish. But remember, we could be in a bear market. Just to make this presentation easier and the strategy easier, we are assuming that we are in a bull market. If in a bear market, invest the opposite rules, which we are going through these examples. Rule 2, choose a stock that is uptrending. An uptrend describes the price movement of a financial asset when the overall trend direction is upward. In an upward trend, each successive peak and trough is higher than the ones found earlier in the trend. The uptrend is therefore composed of higher swing lows and higher swing highs. Moving averages are also utilized by some technical traders to analyze uptrends. When the price is above the moving average, the trend is considered up. Conversely, when the price drops below the moving average, it means the price is now trading below the average price over a given period and may therefore no longer be in an uptrend. Again, the same idea as in Rule 1. If we are in a bull market, we find a stock that is uptrending, this strategy will have a higher percentage of succeeding. Let's go to Rule 3. Use the RSI indicator when it moves into extreme levels. Start buying half the position and at least a 7-day entry. Relative Strength Index is an oscillator. An oscillator is a technical analysis tool that constructs high and low bands between two extreme values and then builds a trend indicator that fluctuates within these bounds. A problem with the RSI is if the trend is strong, it can remain oversold for a long time. So that is why we say 7 trading days plus, with the overall market bullish in an uptrending stock. We are using RSI time period 5, stochastic RSI time period 14, and PS stochastic RSI time period 5. It gives a fast moving RSI and a slower moving RSI. The lower the RSI moves, the higher the chance it will move in your direction. the biggest problem that an RSI could stay overbought for days or for 2 weeks. So I slow buy into the security. This works if rule 1, the overall market trend is bullish. Let's look at an example. Let's start with the QQQs. As we told you, rule 1, we have macro indicators that tell us that this market is going up higher. Rule 2, we choose a stock that is uptrending. Rule 3, we look for the RSI indicators. I've chosen 3 RSI indicators: a PS stochastic RSI, which will move a lot quicker for short term; relative strength on a 5-day, which is more longer term; and then a stochastic RSI, which is another long-term indicator. We're going to wait 7+ days when it gets to extreme levels. So let's start here. I would say here would be somewhat of extreme levels. 1, 2, 3, 4, 5. Off to the races. Another extreme level. Let's look over here. 1, 2, 3, 4, 5. Off to the races. Let's go over here. A long period of time, but still, when all 3 levels are lower and confirming, 7 days. I've seen sometimes 15 days. You're just building a position in there. Let's go over here during the COVID days. Big scares where the levels hit low levels here. And then 1, 2, 3, 4, 5, 6, 7, 8 days, and then off to the races. The next rule will be a trigger, but even just having this as an entry point, having 3 RSIs reaching extreme levels, you might be waiting 7 days, 8 days, but you will have a pop, especially in the overall markets. Let's go to another stock and see where we are. Another one, Apple. Of course, Apple is uptrending. Of course, Apple is a great stock to get into and just leave it. But let's just look at it a few times when the RSIs hit lows. You can see hit lows, and then you're waiting 7 days, 8 days, off to the races. Each time the same thing. Let's continue. Tesla. And let's continue here. Now look how long it stayed on the stochastic RSI low. But still, if you were patient enough, it did go upwards. That's why we say a lot of times the RSI indicators, either the PS RSI, the stochastic RSI, the relative strength index, the relative strength momentum index, all these RSI indicators can stay oversold or overbought for long periods of time. That's why having a period of 7 to 15 days of slowly building the position is what a lot we do. Rule 4, MACD signal to buy the other half position. MACD is more of an oscillator identifying key turning points. It does an excellent job at high points and lower points, but does not do a good job in a narrow range. When you get a buy signal for the MACD, it is a time to enter. Sometimes I like to see a close above a day or a few days high for further confirmation. These two work great in a combination. RSI gets to an extreme level. 3 RSIs get to extreme level. MACD works very well in at the bottom and the top of trends, but does not work well in a trading range. So the MACD at the bottom with a low RSI will signal that this is a true upswing. Let's see it in a chart. Let's look at an example over here. This example shows that RSI stood at a long period of time undersold. it looks like 9, 10 days. But look how the MACD helps. Boom, MACD right there, which then had an upswing. And every time after that, where the MACD and the RSIs moved together, RSIs first went to low levels, and then a MACD signal, it showed that the market went upwards. Same thing over here. You see the MACD, and even though the MACD was oversold a large period over time, as soon as the MACD signal hits, it went off to the races. In this system, we usually do half and half. Half building a position at low RSIs, and the other half when the MACD crosses, usually, if we look back to the left, closing above the price previously. RSI indicator combined with the MACD has the best results in a trending market. Trending market is a price series that continually closes either higher or lower on average over a defined number of periods. Is said to be trending. An upward trending market is one that fluctuates up and down, but on average tends to close higher. A downward trending market ends periodically lower regardless of interim moves. Securities in any asset class tend to show trending behavior of some kind. RSI, PSRI works very well in a market that is moving upwards, and it gives you a great entry signal. What I have seen on major trend changes, it has not worked well. There are many divergences when this indicator happens. What I've also seen for having best results is coupling another indicator, the VIX and the VXN. The CBOE Volatility Index is a real-time index that represents the market's expectations for the relative strengths of near-term price changes of the S&P 500 index. Because it is derived from the price of the SPX index options with near-term expiration dates, it generates a 30-day forward projection of volatility. Volatility, or how fast price changes, is often seen as a way to gauge market sentiment, and in particularly the degree of fear among market participants. To simplify, the VIX and the VXN is really a way at looking at the market sentiment, how people are feeling about the market. Are people feeling scared? Are people feeling anxious? Or are people not scared? Usually the masses are wrong. The more fear or the higher the VIX, the more opportunity it is to buy. Also, the lower the VIX, the less opportunity to buy and the more place to take profits. I have seen coupling the VIX and the VXN with the RSI has worked very well in this indicator. Exit strategy, protect the profit. I have two options for taking your profit. The first option is the RSI gets high with a MACD sell. So it is the opposite of what we did all this way when we thought the market was going higher. Now the RSI gets very high, we have a MACD sell signal, and we take our profit. Don't like this one too much. The second option is you take half the profits on an uptrending stock, then repurchasing when the RSI gets low again. On an uptrending stock, you will participate in the big moves. Be careful of the changing of the trend by watching for gap downs and divergences. The overall market is going higher. The security is uptrending. The RSI combined with the MACD gives you great entry signals. Then suddenly the stock is still going upwards, but we would like to participate in the short-term sell-offs. So we take usually half the positions off the table, waiting for the RSIs to get low again, participating on the bottom side, waiting 5, 6, 7 days to get back in again. RSI MACD goes up higher. We again, when the market gets or the security gets high, we sell out again, sell half the positions. The only problem is with this is when there's a major market sell-off or the security now is not uptrending. Risk management, stop losses. The first thing any good trader or investor should do is to realize that they must never hold any position without a protective stop loss. These issues can really change direction in a hurry when bad news comes out and the institutional herd starts to panic. The way to protect yourself is by using stop orders. Using sell stops results in minimum of emotion and misgivings. Best of all, there will be no gut-wrenching decision making. Stop losses are so important. No system, no strategy, no indicator will work 100% of the time. That is why risk management is an integral part of your trading strategy in any system. Cut your losses. Enough theory. Let's look at a real life example so you feel comfortable adjusting this strategy in the future. Let's start with here. I took the spiders and I just rolled it back a little bit. Sometimes this will work, sometimes it will not work, but let's just take it from here. RSIs at extreme lows. Look at 1, 2, 3, all three hitting the lowest levels there is. And let's see how many days it stood at low levels. 1, 2, 3, 4, 5. Gap up, great sign, and 6, a buy signal. The macro picture looks good. The spiders are always in an uptrend most of the time, at least for the last 10 years. Now look at it go. Bang, 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 bang. Okay, maybe you sold and took some of the position, then it went lower. You re-entered the position, and then you go here. Maybe you took another half a position over here. And then you started building the position again. Higher. So using 3 different RSIs combined with a MACD. Let's go a little bit further. Just going to pick one randomly. Over here. Look how long that these RSIs stood. And maybe you started nibbling over here. But when the buy signal hit, off to the races. Try this on any index. It will work. Try it on the majority of stocks. It will work.
Takeaways. Focus on the macro picture of the market. No indicator will be as successful if you get this right. This is actually the easiest to build a strategy for the overall market. Knowing the overall market is the most important part in picking individual stocks. RSI is a lookout to buy or put some toes in the water. Not jumping in the first day the RSI hits 0. RSI can be oversold or overbought for long periods of time. MACD is an excellent trigger coupled with the RSI. Trending stocks work best for RSIs. Remember, protect your profit and always use stop losses. For further explanations, watch our videos on RSI Strategy Explained, MACD Explained, and Top-Down Strategy Explained. Please subscribe and turn on notifications for our weekly updates on the stock market and cryptocurrencies. You know what I'm going to say. Study it, analyze it, adapt it. Peace.